সো ভেরি গুড আফটারনুন অল। আজকে আমরা করতে যাচ্ছি ফিসকাল পলিসি ইন ইন্ডিয়ার প্র্যাকটিস সেট। এর আগে আমরা করেছিলাম ফিসকাল পলিসি অফ ইন্ডিয়া বুঝেছিলাম। ওকে, এবার ওসব কনসেপ্টগুলো আমরা এবার প্র্যাকটিস সেটগুলো করব, ঠিক আছে? সো নাও we are going to do the practice questions of fiscal policy, right? So now let's start. So I am Shekhar sir. So the first question is about the fiscal policy. Wait for a minute. Let me change ink. Okay. So here question is, fiscal policy in India is formulated by, okay, who create the fiscal policy? So RBI create monetary policy. So this not be the answer. Planning Commission is removed. Now instead of this we have Niti Aayog. Okay, Finance Ministry. Okay, SEBI is dealing with only security and means overall share market. Okay, so SEBI is not the answer. The correct answer is Finance Ministry. Okay, so here it is, answer is number 1. Which one of the following is not an instrument of fiscal policy? Open market operation is the instrument of monetary policy. So this is the answer. Okay, this is not the fiscal policy too. So the answer is number A. Next, during periods of inflation, tax rate. Okay, when there is inflation in our country, so tax rate should be increased so that the inflation will be decreased. Okay, so when we increase the tax, then inflation comes under our control. Okay, so inflation will be reduced. So this is the answer, option number A. So correct answer is option number A, right? Okay, next question. The fringe benefit tax. The fringe benefit tax was introduced in the budget of 2005 and 2006. So this is the right answer. Okay, it was introduced by then Finance Minister P. Chindaraman. P. Chidambaram. P. Chidambaram. Okay, P. Chidambaram. Okay, so answer is option C. Next, gross fiscal deficit is equal to, okay, gross fiscal deficit is equal to net borrowing at home plus borrowing from RBI plus borrowing from abroad. So the answer is option number A. Okay, now option number 6, question number 6, which of the following is an example of direct tax? Okay, entertainment tax. So entertainment tax is included, is indirect tax. Okay, this is indirect tax. This is indirect tax. Sales tax is also indirect tax. Okay, wealth tax is the direct tax. Custom duty is also indirect tax, right? The option is option number C. Okay, so going further, next question, question number 7. Question 7, a progressive tax system collects a greater share of income from those with. Okay, so what is progressive tax? Progressive tax means whoever has higher income will pay higher tax. This is the concept. This is the progressive tax. Okay. So whoever has the higher income will pay the high tax. So this is option B. Option B is the correct answer. Okay. Next. Next question is fiscal policy deals with. Fiscal policy is not dealing uh, with labor market regulation. This is not the work of fiscal policy. Fiscal policy is not dealing with the foreign trade. Okay. Fiscal policy has no relation with the money supply and interest rate. This is the monetary policy. So this is the correct answer. Fiscal policy, taxation and expenditure decision of the government. So option A will be the correct answer. Next, question number 9. So, fiscal responsibility and budget management, FRBM. FRBM Act 2003 aimed to reduce fiscal deficit to 3% of GDP. Okay, this is the target. So, reduce the fiscal deficit by 3%. So, make fiscal deficit only 3% of GDP. This is the this is the aim of FRBM Act of 2003. So the correct answer is option number A. Okay. Next question. Revenue deficit. Revenue deficit. What was the formula of revenue deficit? That is revenue expenditure minus revenue income. So revenue expenditure minus revenue income. Revenue income is we call receipts. So the correct answer is option number B. Option number B is the correct answer. Right. Now let's move further. 11. Primary deficit. Primary deficit. What is the formula of primary deficit? Okay. So fiscal deficit minus interest payment is we call primary deficit. So the answer is option number A. Right? Okay. Okay. So primary deficit. Okay, done. Next question number 12. Which of the following is a capital receipts? Okay, capital receipts. Capital receipt means one time income. So income tax is not a one time income, it is the revenue receipts. Disinvestment proceed. Okay, what is the meaning of disinvestment? Sale of asset. Sale of asset is called disinvestment. So the correct answer is option number B. Option number B is the correct answer. Right? Next, tax expenditure. Tax expenditure refers to revenue foregone due to tax assumption or incentive. Okay, so this is the correct answer. That is tax expenditure reverse. What is the meaning of tax expenditure? It means revenue foregone. Revenue foregone मतलब means আমরা ভুলে যাব যে revenue আমাদের হয়েছে, কেন কি ট্যাক্সে আমাদেরকে এক্সাম্পশন দিতে হচ্ছে, ট্যাক্সে আমাদেরকে ইনসেন্টিভ দিতে হচ্ছে, এই জন্য আমরা tax expenditure means revenue foregone due to tax assumption or incentive. Okay, so correct answer is option number A. Right? Next GST. Okay, GST. So GST is indirect tax. Okay, it is indirect tax. So GST is an indirect tax. So option number B is the correct. Then GST Council is headed by, who head the GST Council? GST Council is headed by Finance Minister. Okay, Finance Minister. Okay, in which article the GST Council is written? This is article number 279A. In article 279A, GST council is mentioned. Okay, so correct answer is option number B. Option number B is the correct answer. Right? All clear? Okay, going further. Number 16. Number 16. Uh, which tax gives the maximum revenue to the government of India? Which tax? Okay. So which tax gives the maximum revenue? Okay, maximum revenue. Here the top term is maximum revenue. So which type of tax is giving maximum revenue? Okay, so as GST is applied to all, okay, everything what we purchase, everything has GST. So GST is the maximum revenue that government is generating, that is GST. So the correct answer is option number C. Okay, okay, right. Next question. Deficit financing. Okay, deficit financing. What is the meaning of deficit financing? It means government has a shortfall of money, and to recover from this shortfall of money, government is financing its deficit. Its deficit. So deficit financing means government borrowing to finance the deficit. Government borrowing to finance the deficit. So this is the correct answer. Okay, if you reduce the tax, then revenue will going down. If you increase the export, yes, the income will increase in our country, but that will not cause deficit financing. If you print new currency, so printing new currency is so much risky. It can create high inflation. So printing new currency is not allowed in our country. Okay, so option D, option C, option B is correct. Option A is the correct answer. Right? Okay. Next number 18. Which of the following measures is used to control inflation under fiscal policy? Okay, to control the inflation, which measure we use? Reducing in public expenditure. Okay, reducing in public expenditure. Increase in public expenditure. If we increase public expenditure, then revenue will create. So this should not be the answer. Decrease in tax. If we decrease in tax, then public will have more and more money supply. Then it will cause the inflation. So this will not be the answer. Increase in subsidy. If we provide more and more subsidy, so automatically the money supply of government will reduce. So this will not be the right answer. The right answer is reduction in public expenditure. This is the right answer. That is option number A. Okay. Next, question number 19. Okay. So union budget is presented under which article? Okay, it is presented under article 112. Remember this. There's an article 112, that in article 112 the written word is annual financial statement. Okay, annual financial statement is mentioned in article 112. So budget term is nowhere mentioned in the constitution. Budget is nowhere mentioned in the constitution. Remember this. So this is article number 112. Clear? Okay, next. Question number 20. Okay. Capital budget consists of capital budget. So in capital budget we have capital Okay, what capital budget means? We have capital receipts and capital expenditure. Okay, so capital receipts and capital expenditure. So correct answer is option number B. Right. Next. Next question is expenditure effective. Okay, this is not the. This is effective revenue deficit. Okay, effective revenue deficit. Deficit excludes effective revenue deficit excludes grants for creation of capital assets. Okay, so this is the right answer. Grants for creation of capital asset. That is the effective revenue deficit minus grants for capital of grants for creation of capital assets. Clear? The option A is the right answer. Option A. Okay, clear. Next, question number 22. Question number 22 is asking the FRBM Act mandate the government to eliminate. Okay, in FRBM Act, government have to, government has to, government has to eliminate, has to eliminate, government has to eliminate revenue deficit. Okay, to eliminate revenue deficit. So revenue deficit is the correct answer. Option B. Right? Option number B. So option number B is the correct answer of question number 22. Next. Next is which committee reviewed the FRBM Act and recommended debt to GDP target? Okay, which committee? Which committee reviewed the FRBM Act and recommended debt to GDP target? Okay, debt to GDP target means out of this GDP, how much amount you are taking and creating as a debt. Okay, this is the target, and this committee name is NK Singh Committee 23 NK Singh Committee. So option B is the correct answer. NK Singh Committee. Correct. Next, public debt management in India is handled by. Okay, public debt management. Public debt management is handled by Ministry of Finance. Okay, so remember this, not RBI, not SEBI, not Niti Aayog, it is Ministry of Finance. So option B is the correct answer. So public debt management in India is handled by Ministry of Finance. Okay, so remember. Next, question number 25. Which of the following? Which of the following is non-debt creating capital receipt? Non-debt creating capital receipt means capital receipts without borrowing. Okay, you have a lump sum amount of income in one time, but you have not taken a loan from anywhere. This is called non-debt creating capital receipts. Okay, so if market borrowing, this is loan, this should not be the answer. Oh, okay, this is the non-debt is a non-debt creating capital receipts. Okay, so this should not be the answer, because market borrowing means you are taking a loan from the market. So this is the debt, this is the debt. Okay, so option A eliminate. Option B is recovery of loan. So you have recovered your loan. So this is the answer. Okay, here you are not taking any loan, you are getting the money that you have given anyone as a loan. Okay, and then we have the disinvestment. So in disinvestment you are just selling the government assets. So selling the government assets will not create any liability. Okay, so option C and B is correct. So right answer is option D. So option D is the right answer here, right? Next, 26. Fiscal consolidation refers to fiscal consolidation. Fiscal consolidation means reducing fiscal deficit and debt. Okay, so you have to reduce the fiscal deficit and debt. This is called fiscal consolidation. So option B is the correct answer, right? Next, 27. Difference between fiscal deficit and revenue deficit. Okay, fiscal deficit and revenue deficit is equal to capital expenditure. Okay, remember it. Capital expenditure. So capital expenditure is the right answer. Option number A. Clear? Next, question number 28. In the union budget, vote on account. Okay, vote on account. Okay, vote on account is the interim provision for expenditure until full budget. Okay, what it is? Okay, I'm explaining you. There is a term that is interim budget. Okay, interim means temporary. Interim means temporary. Okay, so whenever the full budget is not passed, okay, as the time when full budget is not passed, it will take time. So on this place, interim budget interim budget is used. In interim budget, the remaining days in which left the budget to be passed, so to that extent this interim budget will work. Okay, so it is the interim provision for expenditure until the full budget is passed. So this is called vote on account. Okay, so this is called vote on account. Okay, so if your full budget is delayed, then will interim budget will be there for you to manage the public expenditure, right? Clear? 28 question. Next, question number 29. Question number 29. Which of the following is included in revenue expenditure? In revenue expenditure. So in revenue expenditure, so that is revenue expenditure. I told you that in revenue expenditure, the things which are uh, daily basis and monthly basis things. Monthly basis, it means recurring in nature. Recurring in nature, which are frequent in nature. So these types of expenditure, we call it revenue expenditure. So interest payment, we have to make interest payment. So this is a revenue expenditure. Okay, this is the revenue expenditure. This is the daily basis, monthly basis, or recurring in nature. So this is the interest payment. Loan repayment, if you repay all the loans, so it will not, if you repay all the loans, so in future you will not have to pay again. Okay, this is the final end. So this is the capital expenditure. Okay, so this not be the answer. Asset creation, if you are creating asset, so it is a one time. Okay, so it is a capital expenditure. This should not be the answer. Market borrowing, you are taking a loan from market, it means you are getting income. So this is the 1 minute, this is the capital receipts. Okay, option is option number A. Next, number 30. The main objective of fiscal policy, the main objective of fiscal policy is price stability only. No, only price stability is not the objective of fiscal policy. Full employment only. No, only full employment is not the objective of fiscal policy. Balance of payment equilibrium. No, this is not the motive. The main motive is economic growth with social justice. So these are the 30 questions on fiscal policy. On fiscal policy. Okay. These are the questions on fiscal policy. These are the top 30 questions which I made for this lecture. Okay. So keep revising this video again and again, and please take the note of all the questions. Okay. These are the most important questions you have. So class is end here. Thank you so much. Have a nice day.